As a tax accountant in Australia, one of the biggest mistakes Aussies make every single year is not claiming against their allowances or mistaking an allowance for a reimbursement. Now, this is costing you hundreds of dollars every single year. So let's break down what I mean. Now, one of the 3 golden rules with the ATO is that you cannot claim against a deduction that's already been reimbursed to you. But what is a reimbursement and what is an allowance? So an allowance is an estimate of what your employer believes you're going to be out of pocket. A reimbursement is a dollar for dollar payment that does not go in the payroll system, rather gets paid directly to your bank account. This could be a fuel receipt that you give your employer. It could be a uniform receipt. It could be a receipt for a course that you've completed. So these then cannot be claimed because you've been reimbursed in full for them. But with the example of a kilometre allowance or a kilometre reimbursement, you're actually just giving your employer the amount of kilometres you travelled, and they're paying you an estimate of what you've actually incurred. It's not a reimbursement. In most cases, this reimbursement is actually an allowance and it's on your income statement. So when you go to lodge your tax return, it will be listed there on your tax return. In most cases, you're going to have paid tax on it. And if you haven't paid tax on it and it's listed on that income statement, more than ever, you want to be claiming the deductions against it. Otherwise, you're going to be out of pocket. Now, how do you go about claiming those kilometres? Well, our previous video, we spoke about the set rate kilometre method where you can claim up to 5,000 kilometres without a logbook. You could have a situation where your employer is generous and pays you personal travel as well. So they've reimbursed you a lot more kilometres than you would normally be able to claim. In that case, you're only going to be able to claim the work-related deductions, which, as the video explains, in most cases is not going to include travel from your home to your work and back again. But don't forget to claim those kilometres because you will be out of pocket if you don't. Another example of this is a mobile phone allowance. So you could be paid $40 per month and your employer puts this on your income statement so you can see it on your tax return. You've paid tax on it, but the taxpayer thinks, I can only claim the difference. That's not how it works. You can actually claim the amount that is a work-related mobile phone usage allowance, regardless of how much your employer has paid, because you've already paid tax on that anyway. We will have some updated videos on how to claim mobile phones, how to claim internet, work from home, even handbags on tax. As always, if you haven't already done so, hit the follow button for more 2025 tax time tips.